the SEC hasn't said anything new. It's not like they've come around and there's been a speech by Gary Gensler where they've written something that has created an opening. This is purely something BlackRock is seeing. So BlackRock, this is why this matters. They're very smart, and they don't just throw filings out willy-nilly. They are a very high-level, not messing around asset manager, right? So they clearly see something out there that they think they can get through the regulators. It could take years before some of these boomer types are really get over that. Over time, though, I have no doubt that spot Bitcoin ETFs will crush the futures ETFs in assets. Remember, gold ETFs, I think they're somewhere around 70 billion, but they've been around for a while. So I could see crypto ultimately getting up to about where gold is after a couple of years.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Bitcoin is still going sideways, and I'm going to be honest, I would be shocked if we continue to consolidate for really any longer than we already have. I would be shocked if this continues throughout the weekend. Bitcoin is setting up for a big move right now, and interestingly enough, you could see over here, we do have the S&P breaking out of its upwards channel, and we also have the dollar falling below the 100 level for the first time in over 15 months. So everything is looking like we should have some form of an explosive move. And I'm going to tell you guys right now, we actually have the stars aligning potentially for Bitcoin. We have so many indicators at so many critical levels on the verge of basically exploding that I genuinely feel pretty bad for anybody who's not paying attention to crypto right now, because you know what happens as soon as the price starts moving, everybody's like, should I buy now? And then it's too late, right? How long have we had to consolidate down at these levels? So there's a lot of things I do want to talk about today. We also have the ETF situation. Eric Balchunas, he's come out. He said there's about a 50% chance of it being approved, but if it does, we're talking about a potential $30 trillion flood. It's pretty incredible when you consider even just a fraction of that money. We also had a very polarizing sort of report come out, which I did want to talk about regarding institutions. This came from PwC. And of course, you know, talking about Bitcoin, what should we be expecting? Because you got half of the people out there saying we're going to be duped into a major dump. This is just going to turn into a Bart Simpson. Right? You guys have seen these Bart Simpson patterns where that's his head and then boom, it just falls right back down to the level. So there's a lot of different opinions out there right now. Now, just to talk about what happened real quick, I do want to get into the chart, but as you guys know, this morning was a little bit crazy. So you may have remembered back in January when we had the New York Attorney General suing Alex Mashinsky. She said that Mashinsky had tricked hardworking people into investing their life savings into Celsius, promising a big financial return and claiming the platform was safer than a bank. Instead, Celsius collapsed and people were left in financial ruin. Well, just this morning, guys, breaking, we have the SEC suing Alex Mashinsky. So yeah, this is pretty crazy. If we actually see what's going on right now, we have the Federal Trade Commission issued a $4.7 billion fine against Celsius Network. However, the judgment will be suspended to permit Celsius to return its remaining assets to consumers in bankruptcy proceedings. So this is like the big news coming out today. They also said that Celsius, they were accused of making $1.2 billion in unsecured loans, falsely stating that it had 750 million user insurance policy while lying to their customers to keep them from withdrawing their crypto deposits. Leon Goldstein and Mashinsky protected themselves by withdrawing significant sums of crypto from Celsius 2 months before the company filed for bankruptcy. Consumers lost access to their life savings, college funds, and money saved for retirement. And also breaking news at the same time, Alex Mashinsky was in fact indicted on 7 fraud-related charges by the U.S. Department of Justice and was subsequently taken into custody. So that's the breaking news, guys. That's what's going on. We're not going to talk about it anymore. We kind of knew that this was going to eventually happen, right? Now, again, this definitely put a lot of really just gave a bad taste in a lot of investors' mouths where to put their crypto. Again, I don't really recommend specifically any exchanges. I always recommend just keep the money in your own wallet. But if you are trading, you have to put your money somewhere, right? BitGet, I don't know if you guys have seen them. They have reserve ratios of 223%. They've been publishing since December. And yeah, even their USDC ratio is at 2,604%. So if you guys want, you can trade over on BitGet. That is my probably favorite centralized exchange to trade on. If you guys are interested, I do have a tutorial, and there is links below in the description if you guys want to get. There's like thousands of dollars in bonuses, so check that out. But having a look right here, you know, you can see we've been consolidating, and we've been consolidating in an upward trend right here on this line, right here on this parallel channel. And as I said, this was that fake out, but it was a fake out that we were anticipating, because essentially what we wanted to do was we wanted to flip this area into support. And that looks like that is exactly what we did. And we are forming sort of this mini sideways sort of pattern. So again, there's a lot of people that do think that the price is going to fall. And like Rookie XBT said, with all due respect, the only argument that bears really have is the US versus Binance thing hanging over our heads. But even then, it's like everyone's expecting it to happen. We've all got dry powder set aside for when it does happen. So when it does happen, will it really be like it happened? You know what I'm saying? Higher. Right? So again, you know, we've broken out of this parallel channel, clearly broken out of it. In fact, if you fast forward to here, look at this parallel channel was also, you know, the falling wedge, whatever. But at the same time, look at that test right there, perfectly on that intersection of where we had this resistance and then also this downward sloping trend. And I mean, if that's not, you know, perfect retest here, second perfect retest there. And that's exactly why I said that my targets still remain between $47,000 to $57,000. And you can see right here, we are at that critical level. And basically what I was looking to do was break into the Ichimoku cloud. And ultimately, yeah, that level's right, you know, to break into it, we only got to get up to about $32,900. So you can see, again, the significance of the 1.618, that's this level right here. We're about to exit this blue zone, and you can see there's really nothing else in here with the exception of a little bit area around 38, a little bit around 47, but the big Fibonacci level brings us all the way up here to $48,000, right? We have our green right here on the MACD on the monthly. We're looking like we want to break out of this channel. Maybe we might, you know, come down and retest, you know, this area or the 50, but it's been supporting us so far. And don't forget, we do also have a CME futures gap right up here at 35, what is it again? It's $35,180. So again, we know that these gaps get filled, and I'm not too convinced, as I said, on this gap right here. I'm putting a big question mark because that gap was formed after closing another gap. I know, weird, right? Weird stuff. But, you know, a lot of people, again, you know, why am I getting so excited? Well, if you have a look right here, you know, the realized price of Bitcoin, again, is down here at around 20,400. And again, having a look at this chart, you realize that every time we dip below this realized price, we come back up, we usually have a retest, and that's usually the beginning of the bull run. Look at the same thing right here, right? We're dipping below it, we come up, we have a retest, and what happened? Well, that was the start of the bull run. What happened right here? Again, we dipped below it, we came up, we really didn't even retest it that time, we just kind of blew through it. And that was a mid-cycle rally, right? Came back down, same thing. So, you know, if you have a look at what we did right here, you know, we've had that perfect retest. We've had the retest. So that's exactly what I'm looking at. Again, you know, we've moved into the neutral over on the guppy on the weekly. And we are seeing some money flow coming back in. And we do have a lot of support right here at around 20,000, almost even, roughly. So yeah, that is a lot of the reasons why I don't think, even if we do have a Bart Simpson, it's probably just going to be so that these whales can fill their bags and just to sort of throw traders off sides with this Darth Maul type wick. You know what I mean? If you have a look at what Philip Swift pointed out, you know, he says the value of days destroyed multiple, increased on-chain spending volume showing where we are in the cycle right now. And if you have a look, you can kind of see that we always have this first little kind of bump, and then there is that pullback, right? So there is that sort of 30% retrace. But I said, you know, people were saying, well, 30, 40%, well, from this level, that would be bad. But what if we go all the way up to 47 or 50 before having that 30, 40% and then come back down to 25? See, that's the scenario a lot of people aren't really understanding or expecting. And you can see right here what happened. Boom. We went into a massive rally. Again, this right here started to, if you look at right here, that was the beginning after coming out of this bear market. Again, you had this right here. The only thing, again, like they point out why we had this fake out, there was this, I don't know if you guys remember this plus token Ponzi scam. It was this really big thing in the news, and that may have had something to do with why the volume had gotten so high. But again, look at this. We're in the same exact levels, doing the same exact things, guys. So this is why I'm saying, if you really have a look at this, yes, it is possible that we come down here and we, retest this upward sloping trend. But, realistically, the next target is up here at around that $35,000 level. So again, just keeping our eyes on this, I think, once we have this breakout, it could be pretty aggressive. And like I said, we could have a breakout as soon as today, tomorrow. I'm counting on it happening relatively soon. So yeah, that's just that basically. And also another thing to note is you have the market value versus real value. And you can basically see every time we get above this line, generally speaking, not, okay, here, we're in like a mid-cycle, but I mean, once we break it generally for the first time, we usually do rally pretty high. And, just kind of zooming in right here, you can see we're literally dancing. We're dancing on that area. So we're looking for that move. So discussing the implications possibly of an ETF, right? Well, you had Eric Belchunas, and he was talking, and he said that the ETF is the format in which boomers and financial advisors prefer their investments delivered in, right? You got all these people with trusts and all this crazy stuff. And this matters because these guys manage about $30 trillion in assets. So he said that the odds of approval in the next year have increased from what he said used to be about a 1% approval to about a 50% approval. He attributed this to the recent filing by BlackRock, stating that the high-level asset manager, which has about $9 trillion in assets under management, is very smart, and they don't just throw filings around willy-nilly. In other words, if these guys think there's an opportunity, they've done their research, and they're pretty sure that they're going to win.
A couple of years ago, when the Bitcoin future ETF was approved, that brought in a very few days, if I'm not mistaken, billions of new capital into the Bitcoin market. What would be the potential here in terms of capital inflow that we would see in case of an approval?
So I think, because of the SBF FTX scandal, it wouldn't be as big of a launch as I think it would have if it was before that, like in the 2021 era. If a spot Bitcoin went there, I think it would be 10 billion in the first week. I think this will be a slightly more measured launch. I think because of SBF FTX, it could take years before some of these boomer types are really get over that. Over time, though, I have no doubt that spot Bitcoin ETFs will crush the futures ETFs in assets. Remember, gold ETFs, I think they're somewhere around 70 billion. But they've been around for a while. So I can see crypto ultimately getting up to about where gold is after a couple of years.
So an interesting sort of report that came out from PricewaterhouseCoopers, they say the proportion of traditional hedge funds investing in crypto assets has actually declined in the past 12 months. Although the long-term outlook is still positive. And you were hearing about, from a lot of different people, there's this pent-up demand, but a lot of people got burnt. FTX scared a lot of people, so I think that's why you saw the decline. The percentage of funds with exposure fell from 37 to 29%, but no traditional hedge funds plan to decrease their exposure this year. Now, on the flip side, more than a third, 37% of the funds without crypto exposure said that they are curious, but they're waiting for the asset class to mature further. Maybe they're waiting on an ETF. That's up from 30% reported a year ago. More than half, 54%, said they are unlikely to invest in the next 3 years, compared with the 41% in the previous report. I think eventually they're just all going to come around. Every single year, these numbers just get bigger and bigger, but it's so funny. Wait, crypto's the scam. This is an unrelated story, but I wanted to throw this in there. Bank of America, the nation's second largest bank, has been ordered to pay more than $100 million to customers for double charging insufficient fund fees, withholding reward bonuses, and opening accounts without customers' knowledge or permission. The bank is also on the hook for an additional $150 million in penalties for the same violations. Fake accounts. That's crazy. That's a bank, though. That's a bank. But crypto is the, yeah. So, talking about what is going on in crypto world, well, you may know that we have Senator Cynthia Lummis and Kristen Gillibrand. They've been trying to push this proposed bill. So they are reintroducing the Responsible Financial Innovation Act, trying to get it approved. She says it's critical to integrate digital assets into existing laws and to harness its efficiency and transparency of this asset class while addressing risk. As this industry continues to grow, it is critical that Congress carefully crafts legislation that promotes innovation while protecting the consumer against bad actors. So this is, they're trying to get things done. Of course, you got Gary. He came out again, Gary Gensler. He was talking over on some I forget, it's like a panel that they had yesterday. Again, no clear anything, not talking about securities, regulations, none of that. Just his whole, we can't trust these guys, manipulation, blah, blah, blah. Just the same old crap that Gary keeps spewing. It's like, yeah, he really needs to just get out of office altogether. But guys, like I said, I am anticipating that we are going to have, we're starting to actually have an attempted breakout right now as I'm making this video. But, just be careful because, a lot of these meme coins that come out, a lot of them get rugged, and people end up chasing this. And then what happens? You become a bag holder, right? So just be very, very, very careful about that, guys. But on some good news, developers can offer games and apps on Google Play for Android users that allow for the buying and earning of digital assets. Google will now permit apps and games that allow users to buy, sell, and earn digital assets like NFTs. So if you do want to get your crypto off exchanges, guys, definitely check out Engrave. I do have a 10% off code if you check out the links below. But again, like I said, I do think we're going to have a big move. I mean, we could even have the move by the end of today. Who knows? I just think it's been consolidating for far too long. I think that the news has just been way too bullish. There's too many good things going on for crypto right now. And the fact that we're seeing the S&P pump, the fact that we're seeing the DXY dump, I would actually be concerned if crypto didn't have a move to the upside. Then I would be like, what's going on? So that's it for me, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. Until next time, stay crypto. Make sure you check out this tutorial if you guys want to learn how to trade. And until next time, that's it. Peace out, guys.